Okay, so actually, I have two questions. I hope I can get to both of them. So, in my opinion, I'm assuming that's what that meant because it says in your opinion, the best strategy to invest in real estate to maximize returns, what is it? And then, is it buy and hold with interest rates being so low or fix and flip for profits, new or experienced investors? That's an awesome question. And I'm going to have to give you that attorney answer. It all depends. It depends on what you're looking for. If you need uh, what Walter Walford always called eat money, and that's if you need money right away, fix and flip is your best strategy because that's going to give you your highest profits right now. The problem with fix and flip is you're only as good as your last deal. If you're investing long term and you want a little bit less active returns, you can do long term rental. You're right, the interest rates are low, they're going to continue to get lower. We've already discussed this on previous shows where if you got a 30-year fixed mortgage and you have really low rates, you're paying today's dollars far into the future. And we know that especially based on these inflation numbers I'm giving you, that dollar isn't going to be worth as much 10 years from now as it is now, but you're getting ready, you're able to pay it over time with cheaper dollars. At the same time, those properties are going to continue to go up in value. So not only do you have the cash flow, so if you look at it from a stock market perspective, where you have a stock that pays dividends and at the same time goes up in value. So you have the capital gain that you can get long term, and then you've got the cash flow throughout the investment life as well. You can do the same thing by investing in funds that are doing similar things. That would be totally passive. You're not really owning the property. If you're investing in mortgage funds or note funds, you just have the lien on the properties. If you're investing in funds that own property, obviously you're getting the advantage of a capital gain over time, but you may or may not get as much cash flow or income along the way. So again, it just depends on where you are. If you need the money right away, fixing and flipping is the best way to go. I always tell people, if you start off fixing and flipping, you start becoming successful at it. You need to take, one or two houses a year out of what you're doing if you can. It depends on how many you're doing. But take one house a year when you're getting started and dedicate that one to do a long-term rental on. And over time, you can start building up that portfolio. If you haven't heard of dollar cost averaging in the stock market, that's a great way to do it. Yes, properties values will go up over time. It'll cost you a little bit more to get into them, but you're averaging it over time. And people always need a place to live. So single family housing to me is the best route to go until you get into a position where you can start doing, maybe some multifamily and self-storage. You're always looking for cash flow for the long term. That appreciation shouldn't be a motivator when you're doing cash flow properties, but it is going to happen over time. Some areas it's going to happen quicker than others, but over time you're going to get appreciation.